Back with earnings as well. Manish Tandon, CEO and MD at ZenSar Tech, joins in on the show right now. Manish, hi, morning. Tell us what the incremental demand trends have been in the fourth quarter and which direction things are moving now.
No, I would say that the situation on the ground remains the same. I think over the previous interviews, I have mentioned that FY25 is not going to be very different from FY24. And I still maintain that. And I think the geopolitical situation might actually make it worse than FY24. But otherwise, things on the ground have not changed for the better, at least.
All right. And what is the outlook when it comes to your overall growth? Because you had reported decent growth in the midst of headwinds. Is it fair to say that the Hitachi segment has bottomed out?
Well, we are hoping that it has bottomed out. As you know, the high-tech industry has been impacted the most. And I would say they have been impacted because there was a lot of spend that they did during COVID, which was not sustainable. So we are hoping that we have hit the bottom as far as our high-tech revenues are concerned. But again, this quarter also there were furloughs. At least in Q1, there are supposed to be no furloughs, so that is a positive sign. So we are hoping that things have stabilized, at least for us.
Okay, I was actually referring to the high-tech segment. Apologies for that. And, I just want to come back to the first point that was made, the situation on ground in FY25. Will that be similar to FY24? And within this construct, how is ZenSar looking at growing despite these headwinds? And what would be the growth outlook, 1 to 2%?
Well, I think we were impacted significantly by high tech. And this goes back to your previous question. If high tech has actually stabilized for us, then we should see better numbers than last year. Also, I think while you might look at year-over-year numbers, I would say that out of the 5 quarters that I have been around, we have seen growth, sequential growth, quarterly growth in 4 quarters out of 5. So if we can sustain that some sequential quarterly growth every quarter, I think we should do better than on the revenue growth side. We should do better than last
After all, it's after 5 to 6 quarters that all your segments have reported growth, right? Going forward, which segment do you think is going to be leading the growth for you?
If I were to place my bets, I would place them on BFSI and also on healthcare life sciences. I would say these two are the sectors where I see a lot of potential for us.
Right. And what about your margin guidance? Because you've managed to maintain it at 15 to 16 odd percent. Is this conservative or any specific headwinds or investments you have in mind?
No, no, there's no skepticism on the margin. I would say that we are going to invest. We are investing a lot in building out our sales team. And this margin gives us the cushion to make those investments. And those investments are planned in the current year. So that's why the margin commentary remains 15 to 16% rather than 17, 18 or whatever percentage that we are looking at.
Okay, and give us an update on the headcount and the deal wins, both the lead indicators of growth. You've added a headcount for the first time in the last 8 quarters. Deal wins have also been steady. What's the outlook here?
I think from a deal win perspective, what we are doing is differentiating ourselves based on being able to provide the experience to engineering to engagement continuum, which not too many of our peers are able to do. Not someone of our size and not someone with our agility And that is resonating very well in the market. So we are seeing a lot of growth on experience services, engagement services, and the follow through into engineering services. So I would say a lot of stuff is happening on that front. Deal, uh, I wouldn't say that. Look, nobody knows deal cycles and so on. It's something. Every organization is different. I mean, an organization ABC, which is culturally conservative, will take a longer time to finalize a larger deal, and someone who's more aggressive will do it faster. So I do not believe in that deal cycles are getting elongated commentary. I believe that it depends largely on the portfolio of clients that you have and largely the execution and the strategy that you're following.
Right. And what part of your inorganic growth play, or rather, what part would it play in this particular journey? Any acquisitions that you have in the pipeline?
Yeah, we are looking at doing some acquisitions in the healthcare life sciences space. It's early days, but there's always the gap between the cup and the lip, so to say. But hopefully, we'll announce something in the next quarter or so.
And the CFO as well recently resigned, and you had explained the reasoning, but who are you looking at appointing? Is there anyone internal or external that you zeroed in on?
No, I think we have a very good one thing that Sachin did over the last couple of years is he has built a very good finance team under him. They are all seeing the fruits of their labor, so they are very excited about it. And also at a RPG group level, we have a lot of capability available in the finance function, and we are actively looking for a CFO. And I would just say, watch this space.
Okay, good to have you on board. Thank you so much for taking time out and giving us a sense as to how the overall business is shaping up.
If you like this video, then like, share and subscribe to ET Now.